So let's bring it back to Wall Street and the markets then, because the markets have been resilient so far. The S&P 500 up about 4.5% year to date. What would that mean for the markets if we do get this inflation between 8 and 12% by the end of the year? What do you expect to see in terms of market performance?
So historically, again, equities have done pretty well in inflations. Haven't kept up 100%, but they have kept up 60, 70% with a rise in the price in the price index. Certainly do better than bonds, fixed income generally, certainly do better than cash. If you look at the typical inflation hedges, whether it be gold or commodities, real estate, stocks, equities have done well. So I think we're seeing asset inflation in the sense that all of that money supply increase that we discussed earlier first translated into asset prices before it translated into real prices in the real economy. We saw it with the dramatic rise in all kinds of asset classes, which you're familiar with. So I don't see that kind of inflation as being inconsistent with the market continuing to perform at these high levels. We can get into details around what sectors and what have you. But I'm saying two things. One is that, of course, if we talked about some sort of big cataclysmic break, all bets are off, because the market, while it's been strong, I think is on a bed of fragility. And you could see something very disruptive, the equivalent of what happened in February 2022, and all bets are off, and we're going in a different direction. But assuming that doesn't happen, and yet we still have this rising inflation, even look at what's happened in the markets this year when we were in the midst of higher inflation all the way through. The market has more or less ignored it and moved in a different direction, not always up with inflation, not always down when it was down, but has moved consistently. I do think that what matters in this environment is the sectors. And there's some sectors that I really like right now, some sectors that I really don't. And a lot of it goes back to this inflationary view.
All right, so let's break that down. And of course, the Feb 2022 incident that you're referring to is Russia's invasion of Ukraine. And you're saying, barring any kind of tremendously volatile geopolitical escalation or any kind of black swan event, that you think that it's quite likely that we have inflation at, say, 10% by the fourth quarter of 2023, but markets continue to do well. So you're not necessarily anticipating a drop-off in the markets.
Well, I would say both things are a possibility. I don't know that I would say very likely. I want to hedge it a bit and say that I think it's a possibility. I think it could even likely. Very likely is too strong for me, both in terms of hitting 10% inflation. I will say I think it's a probability. And what I will say is I think there's also a probability that the markets continue to float along with that, especially in commodities, especially in dividend-paying, value-playing opportunities.
So let's break down the sectors that you're bullish on then, and how investors should be positioning themselves for this kind of scenario.
I continue to be bullish oil. So I made some good investments in the 2020 to 2022 period. I made some bad investments, but one of the best ones that I made was really going hard and long on oil. You know, going back to 2020 when Exxon, one of my favorites, was trading at $40 a share or below. Now at 120, maybe a little bit less than that today. So tripled over that time. I do not believe the oil boom is done. Again, go back to China reopening is probably one of the biggest drivers, combined with this continued global supply chain disruption of energy markets generally. So anyone like Exxon in the exploration production side, some names in exploration and gas like Chesapeake are also very attractive with a very high double-digit dividend yields and low multiples. In this environment, I like things that are going to do well in inflations. In other words, that have the best probability of keeping up with inflation, where their ability to move up prices doesn't lag by a year. So think about, and by the way, here's another related category, is I like the miners across all strategic metals and even things like coal. Why is that? Well, they're trading at very low multiples, very high dividends. It's interesting because so much of the institutional market, investing market, has been taken out by ESG policies that prohibit investing in coal, in oil, and all these other things. That isn't great for the industry, isn't great for future production. It's pretty good for investors who can take a look at names like Rio, like Vale, BHP, and others that have those attributes of high dividends. You get some volatility, of course, but the multiples are so low right now at 4 or 5 times earnings, and again, double-digit dividend yields. From my perspective, it's hard to pass up.
Okay, so you're very bullish on the energy sector. What else do you think does a good job of hedging or protecting one's portfolio in the scenario that you're saying is within the realms of probability?
So oil and gas, so all strategic mining, which covers a lot of different things. I also I'm very picky on real estate right now. I think there's some terrible markets, and I think there's some great markets. If you look at demographics in places like Texas and Florida, I think we're still going to see a lot of growth in those markets. Elsewhere, probably not so much. I actually think now I've been bullish gold since 2020. I've been wrong for 3 years. So as I said, I got some things wrong, probably with like a lot of people who are watching your programming and Kitco generally. I think it's inevitable, whether it happens this year or not, but I will continue to remain bullish on gold because of, well, the underlying view on inflation, because of the supply demand properties. Absolutely. Next, I would say that I think core crypto has potential this year to rebound from, of course, a very terrible 2022. There are the underlying fundamentals of what is going on in the space in terms of development and use case. One, coming off a terrible year of frauds and scams and otherwise. What will make that not true is if we see a continuation of what we've seen in the last 2 months of this very strong regulatory grab from the Federal Reserve in terms of declaring that crypto assets are not bankable assets, and the enforcement actions we're seeing from the SEC against stable coins and others. That's the contra view. But barring that and barring that continued expansion, I think crypto should perform well this year. When I say crypto, I'm talking about the Bitcoin and Ethereum, not a lot of the other altcoins that that have sprung up.
Okay, let's go back to some of the specifics there. You're bullish on gold. Do you think gold makes a new all-time high in 2023?
I actually do, and on this one, I've had to learn by painful experience, just because I believe it doesn't make it true. As saying goes, occasionally wrong, but never in doubt. And I was very confident on gold in 2020, and very wrong. And
2022.
Sorry, no, all the way back to 2020. So I really started going long and hard on beginning in 2020, and then of course we saw it start to crumble. Then, so I've remained bullish through 2022. We haven't seen the movements that we had. Now, part of this. And the other thing that I got wrong was not appreciating how much the US dollar was going to appreciate in 2021 and 2022. I think that had a factor in tempering the price of gold as the US dollar moved against it. I also think, and I don't want to get too much into tinfoil hat territory here, but what I see going on, or what appears to be going on in the banking market around the derivatives, we've got, 860 billion of gold derivatives notional value outstanding right now, and a very small number of dealers. And I just have a smell, and nothing more than that there's something going on here that is akin to what we saw going on in the mortgage-backed securities market in the mid-2000s and with LIBOR in 2011. What do I mean by that? That we're not getting price transparency here, and when we do, we will see movement to the upside. When and what causes that to break or change, I don't know. But these kinds of things don't last forever.